Hi, so welcome to my new video on the knockout option derivative. So by the end of this video, you will learn what a knockout option derivative work, how it works and what is a knockout. So just want to, before I jump in, just want to disclaimer here that this is more of an educational video, not a financial advice. So please do your due diligence before investments. Um, Before we go into the topic, just want to give a high level overview on the trading topic. So trading compared to investment is highly lucrative. So you will make a lot of money in trading. And if you are not careful, if you are not managing a risk, you will also lose money. Made a screenshot of two big trading companies making billions of euros doing the trading. So usually when people do investment, so when the inflation comes, when there is a war, when there is a rising oil prices, people will get scared. The investment value, the stock prices goes down and people get scared. But for the traders, all these are opportunities to make money. So traders make money when the stock goes up, traders make money when the stock goes down. They make money when there is a war, when there is money, when they will make money when there is peace. So in all the cases, there are opportunities to make money using trading. For a long time, this was not possible to capitalize on this trading, capitalize on this volatility of the market and make money on in the capital market. It was not possible for common people like you and me. But the budget brokers, so in the last maybe 10 years, uh, many budget brokers came up. So they have revolutionized this trading world with a lot of retail brokers like you and me. So now we will be able to go into this capital market and capitalize on the power of option trading, power of different types of trading options that we have to make money from the market. So on the right side, you see a lot of, I have listed a couple of very famous trading brokers that is used by retail traders. Robinhood, very famous in US. Toro is very famous in UK. Trade Republic, XTB, Scalable Capital, they are very famous in Germany. Zerodha, very famous in India. These are all brokers that made trading possible for retail traders, meaning it is possible to do the trading with very low capital, and the commission that they take is also very low. So in the case of, let's say for instance, in the case of Trade Republic, they take just €1 per transaction. So when you buy let's say 100 shares or 100 options, you just pay €1 as transaction fees, and when you sell you pay €1. In the case of Scalable Capital, for instance, they have two options. There is €1 transaction fees like in Trade Republic, or there is also a monthly fees you pay like €30 a month, and then you have a flat trading, so you don't need to pay any transaction fees per trade. So there is a lot of options like this available. Just want to give you this, the enormous amount of opportunity that is opened up for retail traders through these retail brokers. So coming to the point now, so let's look at an Apple stock. So Apple stock has been going down for a long time. This is you see from 6th of December 2022 to 3rd of January 2023. You see the stock value has been going down. So if you had bought the stock in December for €140, now the price is close to €118. So you will be wondering, oh, I lost a lot of money. This is for the investment. So now for trading, for traders, what they will do is they will, instead of buying the stock, if the traders are going for the options trading, in the case here we are talking about knockout options, they could buy a put option. So if you do not know what a put option is, there is a call option. Just check in internet, it's very easy. Put option is when you see that the prices are going down, you buy a put option. And if you think that, if you have the impression that the stock will go up, you will buy a call option. So the details you can check in internet, it's very easy. So what you see here is the price is going down. So the traders, what they will do is they will buy here, in this case, a put option, because put option is predicting that the stock prices will go down. So before going into the put and call options and how the knockout option work, which is the topic for this video, let me give an intro on what an option is. So Investopedia, this is a very famous, very respected source of information for definitions and about investments. So what is an option? An option refers to a financial instrument that is based on the value of the underlying security, such as a stock. So in this video we are talking about Apple stock. So here we are talking about options, an option for an Apple stock. So as you see here, I show you the stock values. Stock values are going down. Now I want to show you how option traders, the knockout option traders, make money using options. Okay, so in the left side you see the stock value. So the stock prices of Apple going down. So in December, someone bought a, let's say someone bought a stock of Apple for 139 euro, and someone else, a trader, he has an impression that okay, the stock values are stock of Apple will go down. So what he will do is he will buy, instead of buying a stock of Apple, he will buy a option contract, a knockout option contract for Apple. So in the right side, what you see is the price movement of a knockout option, short option of Apple. So you see the price of this one is going up, going down, Apple stock. The knockout option for Apple is going up. So this is a short option. Short option says that we are predicting that the prices will go down. So, and this is right. So that is why the prices is going up. Here you need to note two things. One, the price difference. So an Apple stock will cost 100, and so in December it will cost 140 euros. In December, an option, a short option for Apple costs like 1 euros 48 cents. You see the difference. Yeah. So if you have 200 euros, you can buy just one Apple stock, and that will be catastrophic because the price went down. And with the same price, you could buy a lot of options for Apple. This is a big thing. This is a huge advantage of buying options or doing a trading using options. Another second thing that you need to note here is the percentage change. So Apple stocks went down around close to 15%, but you see here that the option prices went up like close to 138%. You may be wondering why it's such a big difference. Yeah, so this is where the power of leverage is coming. So meaning the whoever is offering this option, in this case you see the word Citi, this is Citibank is offering this option. They are providing us with leverage. So here this is 10 times leverage. So that means if the price of the stock goes down 1%, the option price will go close to 10% up for Apple. So this is the power of leverage. So if someone has bought an option for Apple in December, by January the prices have gone up, the option prices have gone up 138%. You see the amount of money you can make with this thing. This is why you see billions made by the traders. If they could predict the movement, the direction of the movement of the stock. So if you see the stock prices will go down or whether it will go up, if you can predict this movement, this is, you can make a lot of money there. Here, very important to also remember in trading. If you have done trading, you will know this. uh, Trading is always a probability game, so no trader will be 100% correct in his prediction. So um, it's a probability. What is the probability that the stock will price go up? So what traders do is they will jump into buying or buying options when they see that the probability that the price will go down is very high. So if the probability is very high, they will buy it. Sometimes they will be wrong, but then they will know how to reduce their loss by different types of ways to reduce the loss. There is keeping a stop loss and many there are many ways to reduce the risk. I will cover it this in a different video. Check out some of my other videos there. So what I want to mention here is two things. One, the difference in prices between an option, buying an option and buying a stock. You see, it's very low. And second thing, what I want to show you is the amount of the change in the price. So the how much you can capitalize from the same amount that you invest in a stock or in an option. So these are the two things I want to discuss here. Now coming to our main theme of this topic, the knockout level. So what is a knockout level? So before coming, I forgot one thing. Here, when you see this option, you may be wondering, so where is the catch? Yeah, why they are why this Citibank is offering such a thing? So the difference is when you buy a stock, you are owning a small part of the company. So if you buy an Apple stock, you have a small share of Apple company. You own the company, a part of the company. You will get the dividends and so on. But if you buy a option, you are just betting on the movement, the direction of the movement of the stock. So you will not get dividends. You will not be able to will not be part of the company meetings and so on. So this is the difference. But second thing is, when you buy options, there is also something called knockout level. So if you're buying a knockout option, there is knockout level. So this is the main topic of our video today. So what is a knockout level? Yeah. So in the right side, imagine that you bought the stock at this level that I showed in the picture here. So here, and the you see that the stock prices, the option prices are gone up, is going to go up. So meaning the prices, how you see that the prices are going down. So you are very happy. You predict that, you see that the Apple stock prices will go down. But when you buy an option, a knockout option, you will also see what is the knockout level. You can select a knockout level. There are different types of options available, and you can select which knockout level you want to take. So imagine that you take a knockout level at here that I marked in the right side, and if the stock price touch this knockout level, irrespective of whether it go down in the opposite direction or whether it come back, if it just touch the knockout level, you are out. You are knocked out of this option contract. Meaning, imagine you bought 10 options for Apple for 14 euros. All your 14 euros are lost. So it might scare you a little bit, but just want to say that there are also ways you can manage this risk by putting stop loss and other ways to do that. But I just want to say that this is what a knockout level is. Um, so this is a very important aspect when you buy a specific option. You need to select the knockout level in such a way that even in the worst case scenario, you will not reach the knockout. Or there are different ways to manage knockout, like you can have a stop loss, so that it doesn't go that and reach the knockout level and so on. So this is the main thing. So you understood now what a knockout level is. You learned now what the advantage of buying an option is. Yeah, so you see the options are very cheap compared to buying a stock. And when you buy an option, you a knockout option, you need to be very careful which knockout level you take. Because when you reach that knockout level, you will be out of the contract and you will not be able to capitalize on the stock movement. So this is something, yeah, this is what I wanted to share with you in today's video. There are I have also created other videos on this topic of knockout option trading. Check out my some of the other videos. Yeah, see you in the next video. Thanks a lot.